If you've been waiting for Ottawa home prices to drop, I've got news for you. They're not. In fact, despite more listings, higher interest rates, and seasonal summer slowdown, prices have stayed stubbornly high. In this video, I'm going to break down the real reasons why prices aren't falling, using the latest market data, and share what I think will happen as we head into the fall. And yes, some of you might be surprised. If you listen to national headline news, you'd think prices should be tanking right now. Higher interest rates? Check. More homes on the market? Check. A slower economy? Check. So why isn't Ottawa following the same script? The answer is really simple. Real estate doesn't move on headlines. It moves on local conditions. And Ottawa's local market is unique. Ottawa behaves differently than Toronto or say Vancouver. Ottawa's real estate market is more stable than these two markets, both Toronto and Vancouver, because it's driven by steady government and tech jobs with fewer speculative or foreign investors. Prices here rise more gradually and correct less sharply, and homes remain more affordable relative to incomes, reducing the risk of these big swings. I've had many buyers over my 2 decades of selling real estate saying, you know what, Liam, I'm just going to hold off and wait for the price crash. Well, those buyers still haven't bought, and we're seeing an annual appreciation every year, 3, 4, 5%. If only they bought years ago, they'd be in a much better position. So let's take a look at the reasons. Reason number 1, balanced demand and supply. Even with active listings up 14% compared to July, Ottawa has 3.2 months of inventory. This is the latest Ottawa Real Estate Board stats. And you're seeing right here, 3.2 months of standing inventory. That's really balanced market territory. Balanced markets don't create big price drops. In fact, they support stability because neither side, buyer or seller, have a huge advantage, really. In Ottawa, steady public sector jobs, population growth, and incoming relocation buyers keep demand steady. Let me explain for you just what months of inventory actually means. Imagine a buffet where people are serving themselves at a steady pace. If no food is brought out, i.e., months of inventory, this would be how long it would take before all of the trades were empty. In housing terms, if Ottawa has 3 months of inventory, it means that at the current rate, buyers are purchasing all of the homes for sale today. It would be gone in 3 months unless new properties came to market. So to break this down, low months of inventory, this would be 0 to 3 months. This is a seller's market. This is COVID days. High months of inventory is over 6 months. So this is a complete buyer's market where prices are softening. The middle range is anywhere from 3 to 6 months. This is what we call a balanced market where prices stay more stable. And as I shared with you, based upon the data put out by Ottawa Real Estate Board, we are right now at 3.2 months of inventory. Quick comparison, in 2021, Ottawa was in full-blown seller's market as most of our nation. Months of inventory sat below 1, meaning homes were selling in days with dozens of showings, multiple offers with no conditions. Prices were climbing at alarming rates, selling hundreds of thousands of dollars above list price. Buyers had little room to negotiate, and conditions like inspections were often waived just to stay competitive. Reason number 2, the townhouse factor. Townhomes are leading the pack in price growth. Based upon stats, you'll see here, townhomes saw the biggest jump in July at 8.3% year over year. This is unheard of. But why? Well, because it really hits that affordability sweet spot. Buyers who can't stretch for that detached home or don't want a condo are landing in that townhome segment. And because demand for the segment is high, sellers don't have to budge on price. We recently sold a townhome in Half Moon Bay, so this is in Barrhaven, just south of Ottawa. It was listed at $549,900. It sold for $557,000. So about $17,000 above list price. Total of 3 offers. Why did it sell so well? Well, there was lots of demand, excellent location. The property was in good shape. There wasn't any major deficiencies that was required. If you're buying a townhouse in this market, be prepared for competition. Even if the rest of the market feels calmer, Pro tip, to make sure you win in a competing offer, I'm going to give you some suggestions you might want to lean into. Number one, have a family letter. This talks to who you are as buyers. See, in a typical negotiation, the seller doesn't even know who you are. They just see your APS, your agreement of purchase of sale. So in a multiple offer, put a paragraph or two about who you are, what you're about, a photo of you and your family. If you have any pets, put them in, and talk about what this house means to you. You'd be surprised how this pulls at the heartstrings of sellers. And you might end up getting the property paying less money than the competing offer, but they really want to sell it to you because the property means so much to them as sellers. The second, give a larger deposit. So around the townhome price point, you'd be looking around $10,000 as a deposit. Give $25,000 as a deposit. You'll get that back if your offer is not accepted and or you go through and you pull out because of conditions on financing or home inspection, but it shows to the seller a sign of good faith of how strong you are. Potentially do a pre-inspection if you have time. Reason number three, the condo market softness isn't enough to pull prices down. Yes, condos are coming down, and you'll see on our data again, put out by Ottawa Real Estate Board, condos are seeing a dip, 1.6% drop year over year. But here's the thing, the condo segment is too small to drag the entire market with it. And for every investor stepping back, there's a first-time home buyer who sees condos as their entry point. In fact, this softer segment can actually be an opportunity for buyers. Yes, you might face less competition compared to freehold homes. There's a chance to negotiate better terms or upgrades. It can be a stepping stone to build equity before moving up to a townhome or detached. Bottom line, condo softness is a market nuance, not a market-wide warning sign. Reason number four, seller psychology. Even with more listings, sellers are not panicking. Many have locked into lower mortgage rates and aren't desperate to sell. So they're holding firm on price. And when well-presented homes sell close to asking, it reinforces the idea that prices are normal at these levels. I'll give you an example, maybe a bit of an outlier, but here it is. We just had a listing last week off Preston Street. This buyer agent showed the property along with a number of other showings. They brought us an offer $25,000 less than our list price. We were only on the market for 2 days. I met with my seller, we analyzed the market, looked at the feedback, reviewed the data, and ultimately declined that offer. 8 days later, we were in a multiple offer situation on that property. It sold well above list price. And fun fact, that original buyer resubmitted their offer considerably higher than the original offer price. And they still lost out. Reason number five, Ottawa's economic insulation. Ottawa's economy is like a market shock absorber. Government jobs, a stable tech sector, and steady immigration keep our housing demand from collapsing the way it might in other cities like, say, Toronto or Vancouver. Also, Ottawa consistently ranks as one of Canada's best places to live, which draws buyers from outside the region. I've had 3 clients over the past 60 days relocate to Ottawa, 2 from Toronto and 1 from Vancouver. Why? Ultimately, it came down to the stability and affordability that Ottawa has to offer. So what does this all mean? Well, if I break it down into the segments, if you're looking at townhomes, they're going up. It's moving fast. Momentum is building. Locking in now could save you significant money down the road. Detached homes, well, it's stable, it's leveling. Use stable prices to your advantage. Offer wisely and negotiate flexible closing terms that meet your timelines. Condos, well, they're leveling and going down. Capitalize on softer prices. Negotiate extras like parking or upgrades and secure good value. The real wild card, it comes down to the interest rates. If the Bank of Canada cuts, we could actually see more buyer activity, and that could push prices up in certain segments. So no, Ottawa's home prices aren't coming down, at least not in a way that changes the game for buyers. If you're sitting on the sidelines waiting for the big crash, you might be waiting a long time. But here's the good news. Even if prices aren't dropping, there are ways to save thousands of dollars through smart negotiation. Watch this video right here to see exactly how it's done.